Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 22nd of August. I'm Daniel Lam, your host for the podcast. Last Thursday, we spoke about the annual Jackson Hole Conference. Fed Chair Powell will speak this upcoming Friday. We believe the Fed is still putting inflation control as the number one priority in their agenda. It is likely that Powell may present a modestly hawkish medium-term policy stance, essentially conveying the message that the Fed is done hiking, but not closing the possibility for more tightening. Now, on top of this, he would like to dampen expectations of early cuts. Powell may raise the prospect of future preemptive strikes in order to limit inflation surges, arguing that the difficulty in slowing inflation and its disproportionate impact on low-income families justify this asymmetric policy. Now, the comments that may influence the markets the most, however, may be those related to the long end in fixed income markets, i.e., how is the Fed taking on rapid yield curve steepening? Let's look at a few indicators here. Bank credit is already slowing in real terms, i.e., the flow of new credit has been sharply curtailed. Now, if you look at the new home building numbers, yes, that has been rebounding, but the recent rise in yields, combined with higher home prices, has brought affordability to its lowest level since 1983. So, with inflation already easing, and not to mention that some banks may still have duration mismatches, yield curve steepening may be quicker than what is desired. Henceforth, this could be a prime time to look at long duration trades. With US 10-year yield at 4.3%, it seems to be facing heavy resistance around the 4.5 to 5% yield area. So this is fitting well with our playing defense thesis, which we spoke about last Thursday in this podcast. It is also very consistent with our recent discussion on the US healthcare sector, which is high quality, reasonably valued, and may outperform the broader US market. And let's not forget that healthcare earnings growth has remained positive even during recessions over the last 2 decades. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.